stocks seeing a host of headlines today. Number one, it's quadruple witching day in the markets, which basically means a lot of volatility and volume picking up, which we just saw. The S&P 500 rebalancing just now, both contributing to the lower finish on Wall Street. If that's not enough, Kraft leaving the Dow Jones Industrial Average today, being replaced by United Healthcare. What will that mean for the markets? We bring in Eugene Munson of Portfolio LLC, David Kelly of JPMorgan Funds, Cliff Davis of BNP Paribas, and our own Rick Santelli. Gentlemen, good to have you on the program. Thanks so much for spending the time.
Thanks for being here.
Lee, let's talk stocks here. What should investors make out of this S&P 500 rebalance tonight?
Well, I think the first thing is, what are the top things that give it rebalance? It's Apple, Google, Berkshire Hathaway. So instead of us trying to find a way to game the system or to find a trade, back in the 1990s, you could actually make some money doing that. But right now, I think investors need to take a step and think the market capitalization of those companies have really expanded. So I think you have to go and think, how much more do we have to go? Can Apple do it? Again, I'm kind of like Dave Darst before. I own some Apple, but I don't know exactly if I want to keep running it. So investors need to know why and what is being rebalanced versus trying to find a trade in it.
Yeah, but I mean, when we know what's being rebalanced, I mean, do you want to follow that? I mean, do you want to follow the hordes of people that are, you know, have sell orders to sell Coca-Cola over the short term, or is this you just wait for things to settle out?
I think you wait for things to settle out. Let's look at quadruple witching yesterday when we had index options and certain index things rebalance on Thursday. Everything worked out clockwork. Now, before, you know, I've said to you, Maria, time and off, I always like to have, you know, triple witching, quadruple witching sitting on a pile of cash. But yesterday, the biggest open option interest was at 1450 on the cash S&P. And what happened is the market went down to 1450 and then tore it up right from there, meaning it was classic textbook. So today, my thing is, don't do anything. Why? Because we had a tell yesterday that everything in derivative land was following a textbook. So when that happens, sit back, relax, go with the flow.
David Kelly, let's talk strategy here. How do you want to invest going into year end?
Well, I think you try to invest based on the tide rather than the waves here. I mean, there are a lot of technical issues going on, but the fundamental thing that's been going on all year round is it's a battle between tail risks and tail valuations. The central banks are taking away some of the tail risks here. That means that the stretched valuations between equities and fixed income don't make sense. And so I would say, you know, make sure you're getting back to balance. You know, you start the segment by saying, do you know where your money is? Well, I know where American retail investors' money is, and that's sitting in cash, sitting in fixed income, not enough in equities. And I think people need to rebalance back towards equities to take advantage of the central banks who really are protecting against Armageddon.
That's a good point, because that's really what we're seeing. We're seeing people want to protect their assets as opposed to take on some risk, even though we have seen a little more risk on last couple of weeks. Do you think that'll happen, David? Do you think we will see that money find its way into equities?
I think we will eventually. I think getting past the election will actually be quite important, because when we get past the election, I think we'll also get past this fiscal cliff worry. And as people see, you know, both the stock market go up a bit and also home prices go up. And in the third quarter, we estimate that household wealth went up by $1.5 trillion just in the third quarter. As that happens, I think that will give people a little bit more confidence. I think confidence is really what this economy needs and what markets need in order to get people to put money back into equities.
Cliff, you putting money back into equities here?
Absolutely. We're seeing significant flows going right back into the equity markets. One of the things that I focus on is just looking at the ratio from puts to calls. Puts being investors looking to go short, calls looking for investors to go long the index. When I look back to the start of this year, in May we hit a peak where we had about 2 buyers of puts for 1 buyer of every call. This past week, that ratio is about even. What that's telling you is that the amount of bullish sentiment has had a fundamental shift. Bearish in May, bullish right now. So I'm really focused on this market just continuing to rally.
And you don't think sort of the election changes that? You think this is all the way to past the election into end of year?
I don't. I mean, I'm taking a close look at the VIX index every day. That's what a lot of our investors are trading. And what we're seeing is the VIX at some of the all-time lows. I mean, we're trading just about at the 5-year lows. What that's telling you is fear is out of the market. When I look at S&P and we're at just about 4-year highs, we're just about at the peak. So it seems as equities are moving forward, as money's coming in, as volatility is low, there's no telling where this market could go but upwards.
Rick Santelli, what happened in the bond markets today as we had this big rebalance? Of course, also Kraft coming out of the Dow, United Health going in. What were you seeing last hour?
Well, we are seeing some of the effects of the program, the agency securities purchase program, which is underway, and it is impacting the treasuries a bit, pulling the spread to to track and correlate with the historic drops in yield in mortgages. So we actually are down a dozen basis points lower today than we were a week ago. And on the trading floors, I hear a little portion of everything being said there. Whether you look at the move or the VIX, there isn't any intensity. If you look at the structure in the back months, it kicks up a little bit. Institutions really run the stock market for the most part, along with issues like high-frequency trade. People down here say they're going to hunker in. That beta buying we've talked about, everybody's talking about it, but they think the closer you get to the elections and or the debate, the political side of the equation could make that exuberant confidence maybe a little shorter lived than it has been.
All right, we'll be watching. Thanks, everybody. Great conversation. We appreciate your time tonight. We'll see you soon.